Okay, so that spends a fair portion of our cash on hand. We still have a little bit if anybody has cash burning a hole in the pocket. One of the things I thought we might do to finish out the evening is go ahead and pull up NeutralTandem. That's that one that's at the very top. Just take a quick look at it to see, do we really believe that that projected return could be 24%? And I thought I had it in my, let's see, I do a few studies. I do. Earlier today, I took a quick look at this one, and this one's actually even a little bit bumpier with a little bit less history. And NeutralTandem, for those of you that aren't familiar with the company, it comes out of the Pittsburgh area. They're in the telecommunications hardware side of things. And I think Nick Strategos from the Pittsburgh chapter is the one who originally brought this one to us. You can see that the sales profile has been pretty good, but as you can see there, with the sales profile continuing at a 15 to 20% growth rate to the north, obviously they've had some margin challenges here in recent days. But taking it to the analysis level, if you embed the longer-term estimates from someplace like Value Line, you can come up with a growth rate somewhere in the 14 to 15% range. Let's jump out and see what we think might be reasonable on the profitability side. And here you see the pressure that, especially with the end of this year and next year forecasted, there has been quite a deflection in revenue, or excuse me, in profit margins. They have run into some competitive pressures apparently. And if you were forecasting this one going forward, you probably would make sure that this is net margin. It is. I've zeroed these out to make it net margin. So a net margin perhaps somewhere down closer to 10 than 20 would make some sense in building your forecast going forward. As far as PEs go, you can see that they have been trending down. The average is closer to 20 for that 3-year period. If you go to Value Line and we look up NeutralTandem, now I'm getting barking mice, I think, again. For NeutralTandem, you can see that they've got a projected average PE in the future of about 18. Let me raise that up so people can see it. So 18 for the long-term forecast. So basically, with those numbers in mind, 14 to 15% for growth, something closer to 10, and something in the high teens for PE, you could basically very quickly audit the situation. Let me share with you guys how you might do that. If you go into manifestinvesting.com and you type the word Eagles, I'll show you this is currently in alpha at the site right now. Eventually it will have its own buttons, but this is how you would access your own stock study library. I know many of you have already tried this if you're part of our forum community. You just type the word Eagles. You can see it's not here, so we got to create a new one. So we'll create a new stock study by typing the ticker symbol Tandem in. And that takes you to a revisable set of fields for the equity analysis guide. So again, it basically pulls in fairly current numbers. I think when the update comes through here in the next few days, this will go up to closer to 260. But you can see the growth rate of 12, the net margin of 10, and the PE ratio of 18. If you wanted to say, okay, well, let's account for the third quarter and raise that to 261, you can see the numbers change a little bit. And if you wanted to say, well, after doing my study, I see 14, but over here I'm concerned and I see maybe 10. And I'd also like to be a little more conservative and pick a PE of 16. So again, as you change those factors, you can do a quick sensitivity analysis. And for this 14% growth rate, 10% net margin, and a PE of 16, you can see that the projected annual return is 20.6. And now this particular study will be in my stock study library, not yours, mine. And when I go back to the library, you can see NeutralTandem listed here on 2 lines. The top line is the line according to the rhinos, the line that you see here. These are the numbers that we would use at Manifest based on, think of it as the analyst consensus, the rhinos, next to the ones that in the study that we just conditioned with slightly different numbers. So again, it can be a quick audit on your the companies that you track. To come back to it in the future, you just come back and say, show it to me. And then if you come back in a few days and you want to just simply update the price, you just click it right there. Okay. So I see a situation where I don't know that I necessarily believe the 24. I do see the margin pressure, but a case could be made for certainly something in the high teens for projected annual return. So have some fun with that. Try it out. Again, the way that you got to it was manifestinvesting.com/Eagles. And just have some fun trying out a few companies. You can see the top of the screen. You can see that it's substituted and accessed and created my own library for my stock studies. Any other questions or comments? And oh, by the way, you can jump straight to the chronicles for all these companies. And if you go into the Eagles, you will very soon be able to see some graphs. They're limited now, but they're starting to roll out for checking the up, straight, and parallel. This happens to be ACOM. So just watch for that stuff, play with it, and give us your thoughts and feedback. Any other comments or questions? Is everybody ready to go watch the Yankees play Tampa Bay or cheer on my Cardinals?
Ann Manning is asking if we know why NeutralTandem has lost about 50% in the last few months.
Well, the stock price is down. I would guess in relation to the incident they had with whatever the competitor was, where they're just basically getting dinged on the margins. If you look back a few months, we had higher expectations. Not just we, the investing community had much higher expectations for margins, up in the mid-teens to perhaps even 20s. And as you can see here on the most recent Value Line report, they've relaxed down closer to that, frankly, closer to that 10% range. So it really does have to do with some competitive pressures. And there's some of the answers right there. Anybody else? I'm showing 9:29. Probably go ahead and wrap things up. If anybody has any last call for questions or comments.
Gene Taken did ask about looking at something in energy, and Herb Lemkel is also asking about looking at PRAA.
Absolutely. We don't have a lot of money to spend, so perhaps that's something we could put on the docket for next month. PRAA came up at the National Convention as a stock that's very high on Ken Kavula's list. And energy also came up in a number of places. Just to make the point, if you go to a company like ExxonMobil right now, and those of you that follow us online are not going to be surprised by this, ExxonMobil has a low total return forecast of about 14. It's mentioned by a couple of the speakers as perhaps being an interesting buying opportunity. You can see that the stock price has been kind of in a flat spot for a couple of years. And we, with long-term perspective, see that as opportunity, not anything to cry in our beverage over. And Randall Lely also mentioned Chevron. I haven't looked at it, but let's pull it up. Chevron isn't quite as attractive unless this is dated, and the price has dropped down much below 98 at 9%. So I think I'd be more tempted to go into Exxon, but certainly it would be worthy of scanning the industry for best in the field to see if it's anywhere near an attractive buying condition. Like I say, we don't have a whole lot of cash left, so probably just table that thought and make sure it's reflected in the meeting summary, and perhaps do some shopping and studying between now and the October meeting. Anybody else? Quiet meeting. Hopefully you've enjoyed jumping around and looking at a few things and learning about Canadian dollars and Canadian
I guess
engineering.
Nancy Cobb asked at the beginning about whether clubs are doing any other investing besides stocks. They were talking about looking at, I guess, in their clubs, ETFs, mutual funds, especially for green companies or small cap companies.
Well, I definitely think it's a good idea, especially if you have, you know, a nice field of opportunity where you can't pick between one or the other. So I think some of us would be well served by diversifying some of those international small cap opportunities. So I think the answer could be yes. You know, for one of my selections from the stock panel at in Cincinnati this weekend, I pointed out that technology has been hammered over the summer, and I actually selected the T. Rowe Price Science Fund. That's PRSCX if you want to check that one out and see what's in it. You're basically buying Apple, Google, you know, Dell, and a couple others like that.
Did you give up on QQQ?
Oh no, I forgot to sell it. For those of you that wonder what Lori's talking about, I was day trading QQQs and I went on vacation. I forgot to sell, and I still have it. I wanted to be a day trader for a day, and I forgot to sell, so I guess I failed as a day trader. So I'm still holding them a month later. And I guess I just don't have the discipline for that.
You're a buy and hold day trader.
I'm a buy and hold day trader, that's right. All right, well, with that, I think we can go ahead and close down. I did want to close with one last thought for those of you, in case any of you are on the fence with respect to our offer for investment clubs. This will come as a shock to some of you, but we are going to raise prices here shortly. We'll be out with an announcement on this in the next couple of days, but this special offer, we weren't kidding when we said it was exclusive and one time. That price is going to go up to $400 on October 1st. And unless you have the transaction in the works, we're going to do that. So if you're on the fence and you're thinking about waiting until November, it might be worth your while to say, hey, Mark, hold a spot for us if you really want to pursue that. It has been a very popular offer, but it's time for us to move to the next level. I think many of you have suggested that our prices are pretty attractive, and many of you have also suggested that when you set us free to do development, we just continue to build interesting and innovative things. So we certainly want to keep that going too. But we just want to build the most effective resources that we possibly can. So FYI, again, the announcement will be out in the next couple of days, if I can manage to find time to get caught up on a whole bunch of stuff, because I was down staying up way too late in Cincinnati for the last few days.
Mark, what was the ticker for that T. Rowe Price fund you were mentioning?
Ticker for T. Rowe Price would be, let's actually take a quick look, and then we'll wrap things up. PRSCX. PR, Sam, Charlie X. And when you go to it and look at it, what we see is a company that's got a relatively high projected return overall, a relatively high quality, somewhat, oh, I forgot Microsoft, and Cunez would kill me. Microsoft, Google, Apple, and a bunch of others in there, but you can see that it's a pretty good mix of some of our favorites sprinkled in with a few others that we might not be so inclined to invest on their own merits. You never know. So interesting. I'm again, for that, I'm just trying to end up in the middle of the pack a year from now. So that's part of the strategy. Don't want to be too high, don't want to be too low. And for those of you that are wondering, all three of my picks made in St. Louis did beat the market 1 year later.
What were they?
A year ago?
Yeah.
I picked, what did I pick? I picked JKE, which is an ETF from Morningstar, large cap stuff. Oh, heck, who would ask? Let's go back and look. Again, we keep track of this stuff because, again, we do like to keep track of how the stuff that we talk about does. One of my favorite things to do while working at Better Investing. Too few people are held accountable for the recommendations they make. You can see that Nancy Butcher ran away with the field with her selection of ZAG.
Wow.
Not too bad, huh? That's $100 invested a year ago. My selections were this JKE, Large Growth Index, Mercado Libre, and Abbott Labs. You can see they all came in ahead, and the rest of these failed to keep up with the market. Overall, though, thanks to Kim Butcher's selection of ZAG, the overall portfolio did pretty good.
But ZAG had a pretty exciting ride through the year. Didn't it go way down at one point?
I don't think so. I think it went up quite a bit, though. The one that really had the exciting, using the term loosely, was Deere Consumer Products and Arena Pharmaceutical. Deere Consumer is one of those Chinese microcaps that basically went up 400% before going down 500%.
What was Arena down to $1?
And Arena was down to $1. So he was right for several months, and then he tends to pick some rather interesting stocks. He's only got to get one right, though, over a period of many years, and he'll dust the field. All right, session 937. Let's go ahead and wrap up. Again, we'll go ahead and purchase the 200 shares of Stantec. Thanks, everybody, for your input and for nudging us down the road of taking a closer look at that. It's a subject we did want to spend a little more time with anyhow. And we'll try to make a side-by-side comparison. And again, we'll be back in about a month with another Challenge Club meeting. So thank you all for your participation, and get out there and enjoy the rest of September. Good night, everybody.